Assalamualaikum and a very good evening. I'm Afika. I'll be your host for today. We would like to welcome you to our free live webinar on digital solution in Islamic capital market in conjunction with the Islamic Capital Market Summit 2021 or ICMS 2021. Before we go to our teaser webinar session, I would like to introduce to you about ICMS 2021. ICMS will be held virtually on 7 and 8 December 2021 under the theme Transformation, Resilience, Sustainability. ICMS 2021 will be organized by CERT. This virtual conference aims to accelerate Islamic capital market development within all financial institutions in Malaysia and globally, as well as stakeholders in their value chain. The conference is expecting to host over 500 Islamic capital market participants, including senior government members, regulators, board members, CEOs, senior management, and practitioners, as well as other financial market players. As for now, these are the confirmed speakers that we have invited from various countries such as Saudi Arabia, Nigeria, United Arab Emirates, Oman, Bahrain, United States, United Kingdom, Indonesia, Brunei, and of course, Malaysia. Before I hand over to our moderator, allow me to take a few minutes to play our multimedia presentation on ICMS 2021. Thank you for watching. For more information, please visit our website on icmsummit.my. Move on to the next agenda. Here is our housekeeping during this webinar. All attendees will be on listening mode during the presentation and discussion. Please click raise hand button if you want to speak directly to our speakers or type your question at the chat box. Evaluation e-form link will be shared at the chat box at the end of the session. Don't forget to fill in. Allow me to introduce to our guest speakers. The 6 outstanding panelists will discuss on digital solutions in Islamic capital market. Our moderator, Mr. Mohamed Othman, Head Big Data Management, TFX Islamic. Our panelists, Dr. Mohamed Damak, Global Head of Islamic Finance, S&P Global Ratings, UAE. Professor Dr. Engku Rabiah Adawiah from IIIBF, IIUM, and member SAC of Negara Malaysia and Securities Commission Malaysia. Mr. Areeb Siddiqui, the CEO of Kestrl UK. Mrs. Ruslena Ramli, the Director of Fintech and Islamic Digital Economy, MDEC Malaysia. Mr. Syakir Hashim, SVP Business Operations for Head Invest. Without further ado, I will pass this session to our moderator, Mr. Zakaria. Please welcome.
Thank you very much for the brief introduction. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen wa salatu wa salam ashrafil anbiya wal mursaleen wa ala alihi wa sahbihi ajma'in. Subhanaka la ilma lana illa ma 'allamtana innaka 'antal alimul hakim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Amma ba'd. Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon, or rather I would say a very good day, since we have audiences from all over the world. Welcome to this teaser webinar on digital solutions in Islamic finance, Islamic capital market, held in conjunction with the Islamic Capital Market Summit 2021, scheduled to be in December this year, inshallah. And firstly, I would like to thank Sir for bringing me back onto the stage to moderate this interesting topic. We are indeed fortunate to have a distinguished panel speakers whom I strongly believe need no introduction at all, because they are basically the gurus in their respective fields. Distinguished guests, panel speakers, ladies and gentlemen. The advance of technologies like 5G, cloud computing, artificial intelligence, and distributed ledger technology could significantly reshape the future landscape of capital markets and their infrastructure. Among others, transforming how issuers fundraise, redefining intermediation, shaping new investor behaviors, as well as revamping clearing and settlement infrastructures. These trends are expected to accelerate productivity gains, and they will also alter the landscape for capital markets. So let's get some insights from Ruslena of MDEC on MDEC's ongoing initiatives on digital solutions for Islamic capital market in the light of the recently launched is a Capital Market Master Plan 3 by the Securities Commission of Malaysia. Please, Ruslena.
Salam sejahtera and a warm welcome to all viewers. I'd like to first thank the organizers for giving this opportunity to MDEC to showcase and also share our experiences with regards to how the programs that we're currently running in regards to the Islamic digital economy. So before I zoom into the Islamic capital markets, allow me to share just the generic programs that we currently have. The most important core pillar that we have currently is the Fintech Booster. So this is the offshoot from Negara's regulatory sandbox in 2016. And we launched this in August. So according to the survey that was conducted, there were three main core pain points in the industry with regards to fintech in general. That includes the first pillar, legal and compliance. 2 is business model. 3 is technology and infrastructure. So we launched the first pillar in August 2020, and Alhamdulillah, we managed to attract close to about 11 partners, which comprise of Sharia advisors and also lawyers. And we ran close to about more than 20 public seminars in facilitating the process for applicants that have registered onto this Fintech Booster platform in better understanding of what they need to do to further enhance in terms of their business sustainability. So the second accelerator that MDEC is involved in is together with MOSTI and also Academy Science Malaysia. So it's a 4 million matching grant, and it's the first industry collaboration that we see in terms of accelerator program for Islamic finance, and it's called iConnect Fintech in Islamic Finance. So you have a collaboration with academia, government agencies such as MDEC, and also industry players, each having a role in trying to encourage and nurture new ideas, solutions, and a lot of the problem statements that came out from this accelerator programs with regards to social finance. And it's interesting to see, you know, the innovative solutions that we're seeing now, especially with our current engagements that we have with industry players. And the final one is SC's FICRA Accelerator. So the problem statements is predominantly on Islamic capital markets. So I'm so excited to hear from Dr. Rabiah on her ideas and, you know, the discussions that's going to happen with regards to tokenization of scope. And, you know, even before we went into this dialogue, we were, you know, the panelists was also engaging in terms like, you know, how can we do this? How can we move the needle forward in terms of revolutionizing Malaysia's debt-based landscape into becoming investment-based? So, and with digital, I sincerely believe that is possible. Some other ideas that has been talked about within the market is also monetization of Arahnu receivables. So because of the current pandemic, a lot of people actually are strapped for cash. So what they do is they will then monetize the goal that they have in the respective RFNU business within Malaysia. So there is a tech player that is looking at monetization of those receivables digitally, and we're so excited in terms of what's going to happen, and without feeling the beans, so we continue to engage with other market players. So key takeaways from the Islamic Capital Market Master Plan. It is a 122-page document, so I can only probably just share one key takeaway. So as we know it, technology has turned the tide on the pandemic. So as the world embraced the Internet of Things, data mining, artificial intelligence, blockchain, disruption to businesses is the new normal. So as an ecosystem builder, MDEC continues to engage with key players within markets and connecting the dots to facilitate sustainable demand, which feeds the supply to our tech companies, fintech and tech companies. So synchronizing these initiatives with the Islamic Capital Market Plan is development of it basically is called development of application programming interfaces, or API for short. So tech novices out there, like me, APIs is basically an interface program that allows two apps to speak to each other. So if you are, sending a message through Facebook or Instagram, or you're checking, say, the weather forecast on your phone, that interface is called an API. So the API allows tech companies like my brother Syakir here, access to information to consumers, permitted consumer information that allows investors, solution providers in terms of products for wealth advisory or investment solutions. So the key players that in this current space, apart from Wahid Invest, is you have the likes of Hello Gold, Microleap, which was the first P2P player, Sharia compliant, and also Itis Crowd. So as we continue to push forward Malaysia's digital agenda, so proactive engagements such as today's event is, to me personally, is key in crystallizing the objectives of the Islamic Capital Market Master Plan, the 12 Malaysia Plan, which was recently launched 3-4 days ago. And I feel that the blueprint that is coming out from Negara will also probably feature digital innovation as one of the core pillars. Thank you, Zach. Over back to you.
Okay, thank you very much, Ruslena. Okay, speaking of fintech booster, which you mentioned earlier, I was actually involved at the earlier stages of the program development. And one of the areas that was discussed was on traditional banks that were, or rather are still struggling in capturing the more digitally nascent audience. So let's get Areeb to talk on the provision of digital front-end services to the banks that are equally important in the capital market industry. Yes, Mr. Areeb.
Hello, assalamu alaikum, and thank you so much, Brother Zakaria, for having me. No, absolutely. I think it's something that's quite exciting happening at the moment. So, just as by way of introduction, my name is Areeb. And the Muslim Money app helps Muslims who want to grow their wealth without compromise. You can call us a sort of neobank or a digital bank with every stage the personal financial. So we start off with budget, short-term specific goals. We then move on to saving to help with short-term goals, things they want to achieve in the next 5 years, whether it's saving for a house deposit or a car or a wedding. And then we help with longer term goals, which are investments, things like that. Can you hear and see me okay? Or is it, yeah? No,
Yes.
I'm seeing shakes and nods. So let me know if that's working.
Stuck a bit, ups and down.
Oh, am I up and down? Okay, maybe if I turn my camera off, that might be easier.
Okay, sure.
Is this any better?
Yes.
Yeah, I think your voice becomes more stable.
Okay, great. I'll do that. Apologies, guys. I'm in a hotel at the moment, so the Wi-Fi might not be brilliant. Okay, perfect. So yes, I'll just read. My name is Areeb Siddiqui, founder and CEO of Kestrl, the Muslim Money app. We're an app based in the UK that helps Muslims who want to grow their wealth without compromising on their beliefs. So we see ourselves, some people call us as a neobank, a digital bank, However, we see ourselves as an app that helps people at every stage of the personal financial journey. So we help people with budgeting solutions for the extreme near term. We help people with saving solutions for goals that they want to achieve in the short term. And then we help people with investment solutions as well, with an investment marketplace where you can invest into people such as similar to Wahid Invest. You can buy and sell gold on the app as well. You can invest into property, and you can even look for home financing solutions as well. Now, whilst I've been on this journey, the thing which comes up time and time again is how retail users experience existing Islamic banks in the UK and also further afield, where if we look at the UK, 90% of Muslims that we have surveyed have said that they strongly desire an Islamic banking solution. However, despite this, fewer than 3% of the Muslim population in the UK, there's over 3 million Muslims in the UK, but fewer than 3% of them engage with Islamic finance or an Islamic bank in any way, shape, or form. And there are three reasons for this. Number one is lack of understanding of the products available. People fail to understand how an Islamic mortgage works and how it's different from a conventional mortgage. All they see is that it's more expensive, or you know, it seems to be interest by another name. So that's number one. Number two is very poor user experience. So if they have a website, it's poorly constructed, it seems very old. If they have an app, you'll be lucky. And if they do have an app, again, it's very old, very clunky, and nowhere near what you would call a typical neobanking app. And the final reason is cost. There is a higher cost associated with Islamic financial products. That, for example, if we look at an Islamic mortgage, they tend to be about 2 to 3% more expensive than a conventional mortgage, which puts a lot of people off. Now, this isn't entirely the bank's fault. It's because for it to be Sharia compliant, they need to borrow money from a different source. They can't borrow from the central bank, the Bank of England, or from the interbank lending rate. They have to use savings accounts to make it Sharia compliant. But that means they have to pay more back to savings accounts, and that leads to the higher costs associated. So these three reasons stop retail customers from engaging with them. At Kestrl, what we're actually finding is, whilst we've been on this journey, is that we're finding success in working as a front-end solution to these existing Islamic banks who are out there. They have good products. Their savings accounts are often quite good and even better than some of the conventional banks that are out there in terms of the rates that they pay. But as Kestrl, we can act as their front-end solution. We're doing this with one of the Islamic banks in the UK today, and we're in talks with some banks in Malaysia about doing the same thing for them, where we can become their app. We can become their front-end viewpoint and their front-end to retail customers to help them appeal to their current user base, but also to reach out to younger users who would far more appreciate these kind of neobanking solutions, who would expect all the services of a conventional digital bank specifically for them as Muslims. And that's what we're finding we're able to do with Kestrl. So I hope that does go some way towards answering the question as to how the banks are struggling and what we can do to help as well with that at Kestrl.
Thank you, Areeb. Well, I think the points about lack of understanding of the products, especially fintech, is almost everywhere. That's where we need people like Ruslena to actually educate the general public on this, especially the fintech products. Okay, so now let's move on to a step. Let's move to a step forward. Let's look at robo-advisory services. Thus, I would like Syakir of Wahid Invest to share his thoughts, to share his experience, as well as all the challenges that he faced as a player of the fintech industry. Yes, please, Syakir.
Okay, thank you very much, Zakaria. Assalamualaikum, everyone. My name is Syakir Hashim, and I'm with Wahid Invest. I look after all our country businesses from the US, UK, Malaysia, and all of the new countries that we are launching. Wahid Invest started in the US back in 2016, where we're licensed as a financial advisor. We're arguably one of the world's first Islamic robo-advisors. We originated, our headquarters is in New York, and that's where we started. Around 2017, we officially launched to good reception to the community, because you know, in Muslim minority countries, you tend to not see that much innovation. Even in Muslim majority countries, you know, innovations in Islamic finance involving technology, it doesn't come fast and furious. So you can imagine, so in Muslim minority countries. So from our success in the US, we decided to expand into the UK in 2018, and also to great reception. And we realized that, you know, this technology tool that we've built, the app that allows millions of retail individuals to invest in an Islamic way, is something that can be very useful beyond the West. And hence we decided to set up our Asia Pacific hub in Malaysia back in 2019, where we're licensed as the first Islamic digital investment manager. To date, we're the only Islamic digital investment manager, despite now there being 6-7 digital investment managers licensed by the Securities Commission in Malaysia. And I think it is weird, but at the same time, I think there's divine intervention. You're in a Muslim majority country, but only one of your 6 robos are Islamic. But we're happy about it, because then we're given the opportunity and the time to go and serve the people that we really want to serve. Malaysia has been a revelation for us, because, you know, we're sort of a US-based company, never really experienced the scale of Southeast Asia or scale of a Muslim majority country. And Malaysia has shown us that the products that we've built, the infrastructure that we built, can scale. We now serve over 200,000 clients around the world, and a lot of which came from Malaysia for us. In terms of challenges of building a fintech company, which I would share Wahid's challenges, and I would also share some of my other peers' challenges. Before Wahid, I founded my own fintech startup, which we sold to one of the largest crowdfunding platforms in Southeast Asia. So I came from this industry at the very onset of fintech in Southeast Asia. In my previous company that I co-founded, we were in the first fintech accelerator in Southeast Asia back in 2015. So I saw how fintech evolved back in 2015 in Singapore to what it became in Malaysia and later on around Southeast Asia. And I've seen some challenges. Some may have been faced by Wahid, some may not have been faced by Wahid. The first one is regulations. The first thing that fintech entrepreneurs think about is regulations, because yeah, you can launch like any e-commerce startup tomorrow, but you can be shut down by the regulators 2 weeks down the road. So that uncertainty affects you a lot, because then you as an entrepreneur, you can't be confident on scaling, number one. Number two, if you're in a space where it's not regulated, the regulators may just come in tomorrow and tell you that you need to put $5 million as paid up capital for you to continue doing your business. That's not good for investors. So that uncertainty in regulations certainly is one of the most important things, important challenges for fintech entrepreneurs to get over. But I would say, you know, the regulators in Southeast Asia, especially in Malaysia, has been very upfront and very involved with fintechs. They didn't have to do it, right? They are regulator. They could have just sat in their offices, here's my rules, you know, comply, and, you know, I'll give you the license if I think you comply. But recently we saw that SC came out with FICRA, the fintech accelerator. I'm not sure if there's any other regulator in Southeast Asia that came out with their own startup accelerator, especially for fintech. And I think that's great, right? That camaraderie, that closeness to the regulator really helps fintech entrepreneurs feel comfortable to comply with whatever regulations that is prevailing at that point of time. Second is ecosystem readiness. You may think that a robo-advisor is such a simple thing, it's an app, you answer 8 questions, the algorithm recommend you something, but there's a lot of dependencies on other people in the society or in the financial ecosystem. Simple things like payment gateway, right? There are some countries that we can't open in because the payment gateway ecosystem is not strong enough. Like, how do we collect money, right? How do we collect money from individuals and invest it when there are no scalable ways to collect them because there are no payment gateways in that country? Number 2, custodians and brokers. How many digital brokers are Islamic in the world today, right? Most of the robo-advisors you see in Southeast Asia, they run their money out of Singapore, right? Through the likes of Saxo Bank. TD Ameritrade. But where the Islamic brokers who, I don't see that ecosystem readiness coming in. But as entrepreneurs, we always have to find ways. So if we have to work with a conventional service provider, we work closely with our Sharia advisors to see how we can make it as Islamic as possible and not contravene some of the laws in the religion. So ecosystem readiness is something that we look at before we open a certain country. Third is talent, right? In fintech, you need multiple sets of talent. You need people who are in the financial side. So we do have Samim, who will be speaking at ICMS, the actual event. Samim, we joined us from Google. Samim was investing Google's money in the public markets. So he joined us so that he fills up the financial side. And we have the technology side, right? We have over 40 developers working for us at Wahid today. But the toughest hire for us is the entrepreneur in the company, because knowing how to scale a financial technology company is very, very a unique skill set. It's very hard to hire people who understand scale, who understands growth, and especially in the Muslim communities, you haven't seen many startups in Muslim countries. And because there are not many startups, not many entrepreneurs, not many people working as tech executives in big startups, you struggle to find people who can help you scale. And that has been one of the challenges. Fourth, I would say, is the market conditions. Certain markets come in with people, the community having a fixed idea of what investing is. And there's a lot of unraveling for us to change that mentality. So for example, I think 2 years ago, the government of Malaysia through the SC put out a research that they've done about what Malaysians think is a good return per year. And the answer for the majority of Malaysians is over 30% per year. So who created that mentality, right? Who created the expectation? So as index investing, what you're expecting, 7-10% per year, and that's great returns for people who's investing with the index. So we have to change a lot of those. And lastly, I would say is funding. Alhamdulillah, Wahid, we've been very successful at fundraising. We've got Saudi Aramco, we've got the Dubai state government, we've got many family offices who backed us up to today. But I saw that many of my fintech peers struggle with fundraising, and I think that has got to do with the lack of VCs focusing on the Islamic space. So in the past, we've been waiting for Islamic VCs to come out to back Islamic startups. But I think the best bet for us right now is to hope that the conventional VCs invest in Islamic startups. And I think that's already happening. In Indonesia, we see our brothers who built Alami Sharia. They raised money from Golden Gate Ventures, East Ventures, Kona Capital. These are all the big names in fintech, in conventional fintech, but they're now backing Islamic startups, Islamic fintech startups. And I think that's the future. And I'm banking on that to fuel the growth of Islamic fintech in Southeast Asia and around the world. I think that's it, Zakaria, from me.
Thank you, Syakir. I would say, wow, that's a long list of challenges. However, I haven't heard of all these innovations, all those facilitative arrangements by the regulators. I'm basically getting excited in this fintech industry. I'm basically getting excited, and I believe everyone is hearing all these innovations and initiatives. But again, we must remember that we are actually doing Islamic finance. We are actually doing Islamic capital market. Thus, all our products must be Sharia compliant. So before we get overexcited over this, let's get some guidance from the Sharia advisor. I mean, our very own Sharia advisor here. So Professor Dr. Engku, could you please guide us on the permissibilities of these solutions from the Sharia perspectives? Because at times, most of us, the industry players, will get so excited and carried away, and at times not knowing that some of our products will tantamount to Sharia non-compliance. Yes, Dr. Engku, please.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And good day to everyone. Thank you very much, Zakaria, and also the rest of the panel for a very interesting start in terms of the discussion. So basically, from what we gather, we understand that actually digital solutions, whether in the Islamic capital market as well as in the financial services, is actually something which is good because it is in one way expected to be more efficient than the old way of doing things in terms of its speed, in terms of cost savings, in terms of its reach to wider range of people. And it is also expected to be more secure because we have things like blockchain, distributed ledger technology, and this is supposed to create more security. But given that, I mean, from the regulatory as well as Sharia perspective, normally the main concerns that we are looking at is more in terms of the protection of the parties in the transaction, in terms of whether the parties or participants are actually getting value, and whether they are not unnecessarily disadvantaged through the people who wanted to abuse the system and the products. Okay, so in that regard, specifically on your point regarding the Sharia compliance of some of these digital solutions, I would like to actually bring the attention of the audience to the fact that actually when we respond to the digital solution, we are actually looking at maybe two main angles. One is in terms of the instruments itself, the digital instruments itself, because there can be a variety of instruments. Some of the instruments maybe they classify as digital assets, and some of the other instruments are actually more like platforms in order to facilitate the funds, fundraising and things like that. Okay, so that's one in terms of the instruments. But this, on the other angle, we also see in terms of the Sharia response in the provision of digital solutions is with regards to the financing aspect of it. Okay, I think earlier, I think it was Syakir mentioning about lack of venture capital coming into the Islamic Fintech. Okay, so financing digital solutions, financing digital Fintech startups would be another angle where there can be Sharia concerns in terms of the purpose, the underlying contract, whether there's Sharia compliance in the financing of these fintech startups or not. So that's one angle. And the other angle is on the digital instruments itself. So because of the time constraint, I'm going to focus more on the digital instruments rather than the financing aspect of it. Maybe that one would be another topic that will be dealt in more detail, perhaps in the main Islamic Capital Market Summit in December, inshallah. Okay, so basically when we look at the digital instruments, actually there can be a variety. And if we look at the discussion about digital assets alone, we see that in the Securities Commission Malaysia's own definition, for example, when they actually issued the Capital Market and Services Prescription of Securities, Digital Currency and Digital Token Order 2019, they actually give specific definition and also conditions for digital currency and digital token. So basically, these are the two main ones that are currently being quite actively issued and traded, digital currency and also digital token. And basically, when we refer to digital currency, it's actually focusing on the digital representation of value, which is actually recorded in distributed digital ledger, whether there is cryptography or not cryptographically secured, they are still considered as digital currency. And the main function of digital currency is more for payment purposes, and it has also other function like a medium of exchange. It can be considered as interchangeable with money, and can be used for crediting and debiting into an account and something of that nature. So it's more for payment purposes, whereas for digital tokens, it is more of a digital representation of which is recorded on a distributed digital ledger, again, either cryptographically secure or otherwise as well. But the purpose of digital token is normally for fundraising. So there's two different purposes, like a currency for payment purposes. Token is more for fundraising purposes. So in terms of the concern from the Sharia perspective is we want to see that these digital assets the nature and character, whether they are recognized as asset from the Sharia perspective or not. And if it is recognized as an asset from the Sharia perspective, the nature of the asset, is it monetary or non-monetary? Is it considered as currency or non-currency? Is it considered as financial asset or non-financial asset? Because that would have an effect in terms of the treatment and the rules applicable. I think the same consideration will apply from the regulatory perspective, because from the regulatory perspective, whether it's financial asset or non-financial, monetary or non-monetary, would have legal regulatory repercussions. Okay, so that's one. And then the other angle that we are looking at is in terms of the behavior, the transactional behavior, whether the way the digital assets have been transacted would be creating a very volatile environment, and whether there would be sufficient certainty, and whether there would be a protection of the counterparty's interest in that transaction. So this is actually important, not only from the Sharia perspective, as well as from the regulatory perspective. From the Sharia perspective, we are looking from the angle of, trying to avoid the major gharar or uncertainty or ambiguity in the transaction, and also avoiding elements of riba or other forms of prohibitions. And because of that, for the purpose of Sharia compliance, we will have some kind of screening for Sharia non-compliance elements, whether in the forms of asset elements in the form of the subject matter itself, or the way the transactions are being done. And similarly, if we compare, relatively speaking, with the regulation, they also look at the transactional behavior as well. Globally, I think more in the context of whether there's money laundering or whether there is financing of terrorism and things like that. In addition to that, they're also looking at things like whether there's a scam or fraud or things of that nature. So that is basically the main concern from the Sharia perspective. Other than that, generally we look at digitalization and tokenization as more of a facilitating instrument. Okay, you can have the traditional instrument, but the moment you digitalize and tokenize it, it is facilitated to become, like I said earlier, a more efficient instrument that can be delivered fast, secured, and with little cost. Okay, so because of that, at the end of the day, our assessment of whether it is Sharia compliant or not would depend very much on the underlying, the assets involved, the way it's being transacted, whether there's element of riba being generated and things like that. Okay. So just to give a more specific example of some recent resolutions by the Sharia Council of the Securities Commission, for example, with regards to digital assets, where we had actually made a resolution back in 2020, last year, with regards to the status of digital assets from a Sharia perspective. And basically, when we discuss digital assets in these meetings at the SC level, of course, we are focusing more in terms of the digital assets that are regulated by the SC. And we have to understand also there are some other digital assets regulated by the central bank or by Negara Malaysia, because in Malaysia, we have two regulators, one for the financial services, one for the capital market. So this one that I'm going to explain is more in terms of the resolution regarding digital assets under the purview or regulatory purview of the SC. And in its meeting, 233rd meeting and 234th meeting. In July last year, we resolved that in terms of the digital currency, the one which is used for payment purposes, it is recognized as a valid asset from the Sharia perspective. So it is considered as mal, or recognized asset from the Sharia perspective. But then in terms of the analysis of the nature of that asset, one, it is actually can be in the category of a digital currency that is without any underlying to back it. Okay, and the second is the digital currency that has a backing of another asset. Let's say we can have gold-backed digital currency, we can have commodity-backed digital currency. So with regards to the digital currency that has a backing of an asset, the ruling for that digital currency would be very much tied to the ruling of the asset underlying that digital currency. Okay, but if it is a digital currency which doesn't have any underlying, it's purely based on algorithm and created on the blockchain, you know, in the likes of Bitcoin, in the like of Ethereum or Ripple, then it is based on this resolution by the SEC, not considered as money, not considered as money or currency from the Sharia perspective. Although it is a recognized asset, but it is not in the category of money. Remember, one of the things that we look at is it, if it is asset, is it monetary or non-monetary? So for digital currency, as it is now, it is still not considered as monetary and more of a normal commodity or normal urut, we call it in Arabic. And because of this resolution, that means it is not a ribawi item. It is not, because currency or money is ribawi. So there are some stringent rulings in terms of its trading. We have the rule on sarf, okay? So since the resolution says it is not currency, so it will not be subject to the rules on currency trading. So you can just treat it as normal assets. It can be deferred in terms of the delivery and things like that. Okay, and it will not be subject to zakat in terms of the zakat for currency in that sense. Okay, so so that's one. And in terms of the digital token, I'm aware that my time is running out. Digital token is also recognized as mal under the category of urut. It's not also considered as currency. But then in terms of Sharia compliance, we need to see when a digital token is issued. First thing is we look at the proceeds from the issuance of this digital token. The proceeds must be utilized for Sharia compliant purposes only. And then secondly, we look also at the rights and benefits attached to the digital token must also be Sharia compliant. And then thirdly, if in the event that the utilization of the proceed is actually mixed, okay, have mixed activities, then there are certain benchmark that needs to be observed. Okay, so that is basically my take for now, because I know that there's another speaker going to speak after this. So thank you very much for the time given for me and your patient listening. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Engku. It's a very comprehensive, and I was about to take notes, and I couldn't cope with your explanations because there are so many things for me to learn. Okay. So basically, we have heard from MDEC, we have heard from the industry players, namely Syakir as well as Areeb, and we have heard about the parameters from the Sharia advisor. While I'm actually excited with the development of this fintech industry, as a credit analyst myself, risk is always close to my heart. I will always look at the worst case scenario. And to the extent, even my wife even asked me once if I could at least one day look at any scenario positively. So now I need my credit or risk guru, Dr. Mohamed Damak, to talk on the risk related to all those solutions that have been mentioned, and in the sense that how do we actually mitigate that? So that, Dr. Damak.
Right, excellent. Thank you very much. Can you see my screen?
Yes, very clear.
Okay, perfect. Excellent, thank you. And you're in the right spirit. I think you always have to look at the risks and at the worst case scenario. First of all, I would like to thank the organizer for the invitation to this important event. Now, similar to many other industries in the past, the music industry is the example that comes to mind. Banks and financial markets will either disrupt themselves or get disrupted by fintech and technological innovation. I think the days or the time where banks were perceived as impenetrable fortresses are definitely gone. And banks and other financial players have been and will continue to lose some business to fintech and to the big tech company. And it's just the beginning, in my opinion. And because this is relevant for creditworthiness, and notwithstanding the fact that such a process might take a lot of time to yield results, in order to determine the risks of how tech disruption is affecting each and every banking market, we at S&P developed a methodology that we call the TRIP analysis, which is based on technology, regulation, industry, and preferences. Now, in technology, for example, we ask ourselves the question, how advanced the bank's overall technological capabilities are, and how supportive the country's technological infrastructure is. In regulation, we try to determine to what extent the banking regulation and the national laws protect the bank's market position and foster also innovation or competition. In the industry, we look at the to what extent the banking system existing structure, profitability, and strategy support its ability to invest in digitalization and to adjust to a more challenging operating environment. And finally, for the preferences, I think the question here is how likely customers are likely to embrace new technology and possibly switch from their traditional bank to a non-bank competitor. Now, what does it mean for the GCC? I think here, the lowest risk is obviously the regulatory risk, and the highest risk is coming from customer preference in our view. I think the main area of disruption in this part of the world is the payment services and money transfer, and that's because of the existence of large expat population and youth that will drive the future growth of the fintech solution. Now, in technology, for example, in this region, we live in an environment where technology is present with good internet connection, strong penetration of smartphones, yet the adoption of big data or AI analytics or cloud computing is still work in progress. And we have also access to some very innovative technologies in this part of the world, such as the payment using the facial recognition, for example. And regulation, I think in this part of the world, the regulators are aware that the banking system play an important role in the financing of the economy. And the fact is there's no other alternative. You don't have a developed capital market in order to take over from the banking system. And as such, disrupting the banks could mean disrupting the whole economy. And this is why the central bank in this part of the world have been protective of the banking system. Now, that also to say that there have been some initiatives in order to develop the fintech sector, such as the fintech hive in the Dubai International Financial Center, which is an accelerator where the fintech can benefit from the experience and the coaching of companies in the DIFC. And also we've seen some regulatory sandboxes being launched here and there in the region. Industry, I think the opportunities are there big time. Again, we are in a region where more than 80% of the population is expatriate. And these folks send more than $100 billion every year back home. And the cost of such transfer is exorbitant, especially if it goes from an emerging market to another emerging market. So lowering the cost, which is, by the way, one of the sustainable development goals, is to lower the cost of money transfer and remittances. So lowering the cost is something that could prompt the switching of customers from the traditional banking system to more innovative solution. And at the same time, there are activities that probably will never be disrupted by fintech in this part of the world, at least not in the short term. And these pertain to the retail and corporate lending, and especially the corporate lending, because people value the relationship they have with the banker and the advice they get from their banker. Yes, you would see crowdfunding solution and fintech popping here and there, but the real business will continue to be in the hands of the banks. And as you know, disruption is not going to affect only the banks. Disruption is going to affect the whole economy, at least totally or partially. And here I will start with the usual suspect, which is the cryptocurrency. Now, for those who argued that cryptocurrency was the new gold in the digital age, I'm sure you're now asking yourself the question whether this is still the case, given the sharp drop in crypto prices when the stock market sell-off started last week. And this is why, from the very beginning at S&P, we've been extremely clear in our opinion with regard to the nature of these instruments. They are all about speculation, speculation, and speculation. And you know, the example that comes to mind is that a decade ago, someone bought a pizza and paid for it using Bitcoin with the equivalent of $200 billion today. So I hope the pizza that time was really delicious. And besides volatility, which is, I think, not only the only flow of cryptocurrency, but another flow is the electricity consumption. Did you know, for example, that Bitcoin consumed more electricity than the whole UK, which is 66 million people in its upper ceiling estimates? And even if you take the average estimate or the middle estimate, it's almost as much as the UAE, and we're 10 million in this country. And that to say two things. Number one, the current validation model is probably not the right one, because you know that Bitcoin, for example, is based on proof of work validation model, but this model is probably consumes a lot of energy, and hence why Ethereum, for example, is moving to another model, which is the proof of stake. And also for investors that have ESG consideration as part of their mandate, which means today, most, if not all, the top investors, crypto is de facto out. And when crypto loses value, I think the investors who pay the cost for that is the retail investors. Now, the real disruptor is not cryptocurrency. The real disruptor is central bank digital currency. Because you know, central bank digital currency never lose value. At least one digital dollar would always be worth $1. And if you look at this chart, you can see that people trust only the central banks to come up with digital currency. The net confidence is negative for pretty much everyone, including tech companies, credit card companies. And when the central bank will start to issue digital currency, this is where the real disruption would start. And some of them are more advanced than others. For example, China is quite advanced compared with the other central banks in the world. And the impact on the banks would be limited under the assumption that the central bank decide to go for a decentralized model where all the customer-facing services are dealt with by the banks. And it seems that there's a preference for this model. But if they decide to go for the alternative model where all the accounts are opened and dealt with by the central banks, I mean, in this case, God help the banks, because their raison d'etre will be gone forever. But I'm sure that at least the way it appeared to us, central banks would not be willing to go through this big bang. And on the opposite, I think the central banks would be willing to make sure that the general public has confidence in the CBDC, and there are some core features that CBDC has to comply with in order to achieve that, which is, for example, being a liability of the central bank, being convertible at par with fiat currency, being accessible, and helping to enhance the implementation of economic policy, just to name few. The other real disruptor, and I think a few of my fellow panelists talked about that, is tokenization. And this is the possibility of creating one or several digital representation of a physical or non-physical asset and managing that on a blockchain or on a distributed ledger. For use cases of tokenization, I think sky is the limit. Let's take a house, for example, that costs $1 million. If you want to sell it, you would probably be speaking to a limited number of investors. But if you want to sell it in the form of 1,000 tokens with $1,000 each, then you would open a broader range or broader base of investors. Other use cases for tokenization include capital raising for SMEs, public equity, and even art. I mean, art can be tokenized. And in our view, tokenization not only improves market efficiency, but also it improves the security of the transaction. But similar to CBDC, there are few prerequisites that need to be achieved in order to achieve the full potential of tokenization. One of them is having a proper regulatory environment, and another one is the readiness of the technology. Technology is also another disruptor. For example, using blockchain can help making the process of sukuk issuance and management smoother than it is today, as it resolves 3 challenges. Number 1, it resolves the challenge related to the track of the underlying assets. And here, think of standard 59 of the AOFE and the tangibility ratio. Number 2, it could help the tracking of the cash flows. And here, think of the corrective action or the promptness of the corrective action that could be implemented if one of the underlying assets is not performing up to the expectation. And thirdly, it could help tracking the investors. And here, when it's combined with smart contract protocol, it could help the decision-making process if, for example, investors need to decide on the way the sukuk need to be managed going forward. And beyond that, I think few platforms have been launched to help the issuance of digital bonds and sukuk. And these have the potential of making the process much, much more efficient than it is currently. So in conclusion, disrupt or you get disrupted. I think banks and financial markets will be profoundly disrupted by fintech, by tokenization, by CBDCs, by platform of issuance of digital bonds and sukuk. And in this part of the world, I think they could still count on the regulatory protection and a natural protection of some business lines. But in the longer term, everything can be potentially impacted. Thank you for your attention, and back to you, moderator.
Thank you, Dr. Mohamed Damak. I think you really stick to your timing, 9.3 minutes. Okay. So due to the time constraint, I think I'm now opening for a short question and answer session. And as usual, please introduce yourself and identify the panel member if you have any specific questions to them. Alternatively, you can actually post your questions in the chat box, together with your name and email address, so that if time is insufficient for us to answer all of them, the organizer will have to respond via the email. So now the floor is open for questions. Anyone from the floor?
There's a hand raised, Zakaria.
Mr. Shabnam.
Sorry, is there any hand raised or?
This one, yeah.
Mr. Shabnam.
Yes, please. Yeah, who's this?
Bismillahirrahmanirrahim. Assalamualaikum. Shabnam here. Prof, I have a quick question for you. Just curious on the SAC of SC's ruling for the digital currency without underlying is viewed as an asset. I'm just comparing it to, let's say, fiat money nowadays, right? Because there's no backing as well, but it's viewed as currency. Yeah? So I'm just curious, what was the consideration that the SAC took into account? Thank you.
Thank you very much, Shabnam, for that question. So basically, the reason why the fiat money is, although without asset, so I'm not saying that if all the money is without asset backing, it will not be considered as money, not necessarily. But for the digital currency, the reason why it is not considered as money, one is because it has no legal tender as yet. The central bank clearly declared that they are not recognizing any of these digital or crypto digital currency as a legal tender, so they don't have recognition by any legal authority. And the second way to get recognition as a currency is by the community acceptance in a way that it is consistent and or very quite conclusive, that they are accepting it as a medium of exchange, a measure of value. So the way we assess the data about the use of this digital currency, it is still very minimal in very specific group of people, that it is not having that clout to be recognized as the community acceptance that we would require before we can say that it is a currency that can be a measure of value and a medium of exchange. So because of that, we decided that it is not yet, or cannot yet be considered as money or currency, but it is still an asset of value. So you can have trading on it like a normal commodity. So that's the main reason, Shabnam. I hope that answers your question.
Thank you, Dr. Engku. Any more questions?
There's another hand raised, Zakaria. Dr. Muhammad Isol, I think.
Okay, yes,
Okay, sorry. Okay, yes, thank you very much, Prof. I think I would write on the same question as well. First, as you mentioned that because of the recognition or as a legal tender by the governments or central bank, if in case there is a country where the central bank can accept this as their legal tender, so that country can, consider as a currency and then can impose the zakat as well on that as a zakat on currency, isn't it? Okay, I go back to the other questions. Now, our Bank Negara cannot accept this as a currency, so the zakat imposition cannot be done on that because it's not currency. So it will go to the mal. But my question is to consider it as a mal, but the crypto has no intrinsic value. So how to measure as an asset, because there is no intrinsic value on that. And I'm also quite sure that need your response as well. It's a gold-backed cryptocurrency, so that one is considered no issues in it. So it can be accepted as a currency, and then the zakat imposition can be imposed on that. So thank you very much, Prof. Need your.
Okay, we take the second part first, because I can still remember it well. Okay, the gold-backed crypto, yes, that is something which is acceptable, but whether it is currency like a legal tender, that would depend on what we call this, the government or the central bank to accept or not. Okay, but from the Sharia perspective, the moment it is backed by gold, and as you know, gold is treated in a similar category with money, and the rule of money will be applicable. Okay, in terms of its trading, its exchange, where it has to observe the rule of sarf, and in terms of payment or zakat, also similar with the other categories lah, basically. So that is the answer for your second question. Your first one is just now about what?
My first question is about if we consider this as an asset is a normal mal.
Okay, the urut part. Okay.
Yeah. So urut part, and there has no intrinsic
value. Okay. So the issue about intrinsic value, normally we actually go back to the because value is normally given by the people to such a thing, and because of that thing has value. Of course, even if we talk about gold, a lot of people say gold has intrinsic value, but what is the intrinsic value of gold? Basically because people give a value to it. Okay, if people do not give any value to that gold, then it will not have that value, right? So in a similar way, when we talk about this digital asset, considered as urut, because it has a value that people give to it based on the supply and demand in the market, and because of that, it can be used as in exchange, just like any other commodity. You can exchange it for another counter value, right? So that is the thing that we have looked at basically, and there are actually ways to determine the value of those digital assets at any point of time. So that gives some kind of certainty in terms of the behavior of that asset itself. We are talking about the digital asset that are actually regulated by the
There's
SCA.
one question by Mariam Rashno.
Maybe just a little bit.
She wrote.
Zakaria, just a little bit, just to qualify that actually we're talking about the digital asset which is under the regulatory approved by the SCA to be traded on the DEX only, because they have that certainty. I'm not talking about just any digital currency in the market. Okay, thank you.
Okay, sure. Okay, back to my question. There's a question in the chat room by Mariam Rashno, who's asking as in, can we consider payment tokens as currency? So I suppose Dr. Engku or who else? No, they're talking about the payment tokens.
Yeah.
Do we consider that as?
I think it's not. I mean, given I don't know the specifics of the question, but in general, because it's just a payment token, just like when we have, let's say in a school, we have some coupons being given and we can use the coupon to pay for something, right? That's a payment token, simple layman kind of payment token. It is not currency of circulation. I mean, it's not like a legal tender, no. It's a token. It has value, but it's not currency in the technical sense of it. Yeah.
Thank you, Dr. Engku. Okay, any more questions from the floor? Sorry, I can't really see the hands or whatever.
Okay, I will assist.
So any questions from the? Okay. Any more questions? Okay, I just like to ask Ruslena, because I think Syakir mentioned about the numbers of fintech companies, those kind of things. So has MDEC a database of all fintech companies? So do you only have those registered or involved in MDEC's program?
So based on our Islamic finance database, the active ones are roughly 25 fintech players. But within the tech ecosystem and globalization, which is where FIDE resides under, we have roughly about 800 tech companies, and the 25 includes that. So, programs such as the iConnect Fintech in Islamic finance, we managed to funnel 16 out of the 36 applicants for that grant. So, and that is what MDEC's core activity is to provide opportunities in terms of the supply for our tech and fintech players.
Okay.
Can I ask a question to Areeb?
Sure.
Can I?
Hi, sure.
Yeah, I just want to ask about, because Malaysia is going to have digital banks, okay? Because you did mention that the way your Kestrl, right? Kestrl actually
Kestrl,
is
yeah.
working is like a digital bank. So maybe if you can explain a bit further, what does it take actually to be a digital bank? Because there's a particular party who wanted to do actually a Islamic digital bank, and not only Islamic digital bank, but also Islamic digital Wakaf bank. Okay, so I'm just thinking, what actually does it take to be a digital bank and to be successful in that?
So it's a really interesting question, because in terms of a successful digital bank, a conventional digital bank, I'm not sure we've seen one that you can fully classify as a success yet. So if you look at the non-Islamic digital banks like Monzo, Monzo still isn't a business success. They haven't become profitable yet. That's one of the big problems in fintech. That profitability is something that people are chasing, but they haven't yet found. Other banks are managing to get there, such as Starling Bank in the UK. They've done that by focusing on business banking, so corporate banking for corporate customers. And Revolut has started to get to profitability as well by focusing on their investment marketplace. In terms of how we see a digital bank being successful, we see it about partnerships. So we, as a fintech at Kestrl, we have a great tech talent. We have a data science team. We have 12 full-time employees as a tech team based in Malaysia, in Johor. So we are very much, even though we're headquartered in the UK, we are very much split between Malaysia and the UK. And whilst our tech is great, our user experience is really good as well. We've worked very hard developing that. We know that it is pretty much impossible for a fintech with its limited funding and alhamdulillah, we raised money a few times now, but it's always going to be difficult for us to compete with a big conventional bank, right? Your CIMBs, your Bank Islams, your all of that, because they have the resources, they have literally 200 people teams to devote to specific products, that kind of thing. And they have products. They have good products. Maybe they don't have the great user experience, but they do have that. So I see it as a partnership. For a digital bank to really work, I think they do need to work with existing banks. And that is also how you overcome what Syakir was talking about in terms of the big regulatory issue that exists in Southeast Asia as well. A lot of fintechs, it's very difficult to get a banking license in Malaysia. It's difficult to get a banking license anywhere in the world, but especially in Malaysia. And that digital banking license is very limited. However, to work with the bank, you can take advantage of their existing license. You become the tech provider, they provide the products and the banking solutions in that way. So like I say, we are part of the FICRA accelerator in Malaysia. And alhamdulillah, we've had a lot of interest from banks on that accelerator of wanting to work with us, wanting to use our algorithms that we've already developed, wanting to use our data science solutions, and some of our other products that they want to slot in to their existing solutions. So we've developed a Sharia stock screener where you can look at stocks on the UK and the US markets and see whether they're Sharia compliant or not. We developed a bunch of other personal financial management tools already that it would take these banks a while to do, but we already have and can do that. So I hope that answers your question. And that I think it's all about partnerships, basically.
Sure. Thank you very much, Areeb.
Okay, I've got another question from Mr. Mohamed Habibur Rahman. He's asking, I'm not so sure whether the question is from the Sharia perspective or from the fintech perspective. Can receivables be monetized and tokenized? So we can be from the Sharia perspective, maybe the Engku can talk about the permissibility from the Sharia perspective, or maybe from the product side, maybe Syakir or Areeb can talk about receivables from the instruments perspective. Yes, maybe you can start off again with Dr. Engku. Can receivables be monetized and tokenized?
Can Areeb take it first because it's Azan here? Maybe it will be interrupting the sound. So Areeb can take it first.
No problem.
Yes.
I mean, sure, I'll do that. So in terms of the tokenization, we've seen, as we've spoken about before, we've seen a lot of different assets which are able to be tokenized. I've worked with a couple of regulators as well, specifically the Swiss regulator who were a couple of years ago developing the Swiss Digital Exchange. I think they called it SDX, where they intended on creating the world's first fully regulated exchange for a number of products. And they saw everything from properties wanting to be listed on there to wine to fine art, that kind of thing. And they were looking at that too. I've also worked with big asset management firms. I worked with Invesco, who were looking at tokenizing property and more specifically real estate investment trusts on a blockchain. So in terms of can they do it, you can tokenize whatever you put your mind to. It's more the real question is, should you be doing it? Which is what inevitably came up when I was working with Invesco and when I was also working with the Swiss regulator. With Invesco, what we ended up determining was that yes, you can do it, and the benefits would be, you'd get notoriety, you'd probably get some articles in The Economist and the Financial Times about you. It would be interesting to your clients. However, you could very just as easily end up doing the same thing, just using existing structures, using existing exchanges that were already there, and sort of doing a kind of tokenization on existing, for example, the UK exchange or the Swiss exchange, that kind of thing. So in the end, they decided not to pursue the project just because it seemed more like a vanity project, something that would be interesting to the tech team, but wouldn't actually add that much value to the business itself. In terms of the Swiss digital exchange, they are still pursuing that product, but I think they have made leaps and bounds on it. The one issue that always comes up with tokenization is whether you go for a private or a public blockchain. So the real kind of idea of the distributed ledger is that it is fully public. It is something that no one centrally controls. It's entirely decentralized. Everyone has full autonomy and control of their own data, and in the purest sense. However, that is a lot of control for a corporation to hand over to other people. And so far we haven't seen, unless I stand to be corrected, we haven't seen someone fully take that up in the financial services space at the moment, doing a fully public blockchain. Private blockchains do exist, but then the argument is that the key benefit of the distributed ledger, the public distributed ledger, is diminished entirely when you have a private blockchain, which is centrally controlled by an overall body. So those things do exist, they have been used, but they, in my opinion, and it is just my opinion, they do sometimes come off as more sort of vanity projects that, hey, look at what we're doing, without adding real sort of value to the end user. But that's my take on it. I don't know if anyone else wants to go.
Okay, thank you, Areeb, for taking it first. Can I just go with the answer from the Sharia perspective? Yeah, so basically from the Sharia perspective, we look at the issue like similar with when we are talking about taskik or tawrid, because from the Sharia perspective, whether you do securitization or you do monetization or you do tokenization, the underlying concern would be the same, because we are actually trying to represent the underlying asset into a different form in order to facilitate its trading and issuance, right? In the case of tokenization, because we have that distributed ledger technology, it became a digital token, so it has certain characteristic to it that relates to DLT kind of technology, in the process of tokenization. When we talk about, for example, securitization or issuing a sukuk, sukuk is also a form of representation of the underlying asset. So the question is about using receivables, whether in securitization or in tokenization. It will be the same issue from the Sharia perspective, is because receivable is treated as dine or debt. And being a debt, there are differences of Sharia view with regards to whether that can be traded. Because when you do tokenization of the receivables, I would believe that it will also involve the issuance and also the trading, right, of the token. So then you are buying and selling a token which represent a debt, okay, and some scholars regard like AOFI, for example, they regard that as similar to money or monetary. So because of that, they must be traded at par value. So and because normally the token is being bought and sold in order to get a capital gain. So we're talking about par value, then that does not work lah. Basically, there's no commercial reason for having a trading on the token if you're going to buy and sell at the same price that you initially get, or the par value of the debt itself, right? Basically. So, but of course, we have another different view in Malaysia by the SAC, where they consider dine or receivables not similar to money. They have value that can be referable to money, but it is not money. It is just a token representing a right to receive the payment in the future. So you can buy and sell the right at a willing buyer, willing seller kind of arrangement. So that's the view in Malaysia. So that's why we see in Malaysia, the Sharia opinion would allow for securitization, and I would believe tokenization of receivables, but it may have an issue at other parts of the world who may have a different Sharia view. And the other issue, apart from the issue of whether it is monetary and can attract the rule of riba if not properly traded, is the issue of gharar or uncertainty, whether those receivables would actually be realized or not. So there are also a number of Sharia view that seems to consider that the sale of receivable would attract a major uncertainty or gharar, like we have seen in the subprime mortgage crisis, where effectively they're actually packaging those receivables into the subprime securities, right? So when the original debtor did not pay, then the whole thing collapsed. So the holder of that receivables cannot realize the value from their investments. So those are some of the concerns. So it's not a straightforward Sharia approval if you're talking about tokenization of receivables.
Thank you, Dr. Engku. It's unfortunate that I have to close the question and answer session because time is against us. So as I mentioned earlier, or rather has been mentioned earlier, this is just a teaser webinar. So in other words, it's basically to entice the audience to basically join and participate in the coming Islamic Capital Market Summit 2021. So before we end the session, I would like each and every panel speaker to give a short and sweet teaser to ensure that today's audience will immediately register for the coming summit. Let's start with Ruslena. What's your short and sweet teaser to entice people to come back in?
Okay, for me personally, Suku has always been the darling of the Islamic capital markets, and you know, the panelists today spoke about opportunities of tokenization, and I think that's going to be a big thing, and I hope to see successful issuance at least by next year. We touched on P2P and ECP as a funding opportunity. For me personally, it would be great to see how social finance can also play a key role in the Islamic capital market space in terms of circulation and distribution of zakat payments to empower businesses, women entrepreneurship, and facilitating the B40s to move up the income bracket. And I think that is a strategic goal by the Malaysian government for our 12 Malaysia plan. So as we continue to become MDEC, the torchbearer in rallying industry stakeholders to join us, I sincerely hope that, you know, this collaboration can realize Malaysia's ambition to become the heart of digital ASEAN. Thank you.
Thank you, Ruslena. That's very enticing. Okay, let's go to Mr. Areeb Siddiqui.
Thank you so much. From my perspective, what I'm most excited about, and what I hope other people are more excited about, is how fintech is going to hit the Southeast Asian region, and how big that's going to be, inshallah. So, you know, we've already seen Wahid Invest breaking new ground there, and their success that they've made. What I'm hoping for, and what we're working for with the FICRA Accelerator, which is run through SEC. We're hoping that we can sort of nurture these partnerships with existing banks, these bigger banks who have good products, but they maybe don't have the technical capabilities or the user experience. We're hoping that we can bring our UK learned user experience, our UK learned tech experience, and bring that to Southeast Asia to help accelerate that journey into fintech and help bring some of these bigger banks into the kind of fintech age, working together in partnership in order to help the end user ultimately. That's what we're really, really excited to be doing, and what I hope to see at Capital Markets Exposition. Thank you.
Okay. Thank you, Areeb. Okay, I think for those who have yet to open the chat room, there's one message from Areeb saying that if anyone would like to reach out regarding Kestrl, Islamic fintech or UK fintech landscape in general, feel free to reach out on Areeb@kestrl.io. So I think you have the address. You can check with a search to have the full address. Okay, let's hear something from Syakir.
Yeah, so the question was, what can we say to encourage the attendees today to join the summit? I'm in the fintech space. All day, every day, I just think of fintech and Wahid. And in this past 1.5 hours, I've learned so much. Learning, listening to Dr. Damak, listening to and the rest of speakers. There's just so many things about Bitcoin, about how tokenization is being viewed from a Sharia perspective. I find it useful, so I think all of you, would also probably benefit from having deeper conversations across the different panels during the summit. I'm one of the least experienced people around. There'll be more experienced people attending the full summit. So I think there's a lot to learn and a lot to understand further about the fintech and the Islamic capital markets.
Well, likewise, I learned a lot today. I learned a lot, especially on the Sharia perspective from Dr. Engku. So Yeah, Dr. Engku, what's your apart? I mean, I think whatever you presented today is really interesting, really, and they're really an eye opener, and I believe people will want to come back and learn more. So, or maybe you have something else that you would like to entice people to join.
Okay, thank you, Zakaria. Basically, if you look at the theme of the Islamic Capital Market Summit in December, it is transformation, resilience, and sustainability. And because we have seen how the pandemic and then later it's going to be endemic has sort of shaken the way we look and treat things, the way we do things before. So now we can see that certain things that we are not used to, like being on this webinar, I'm not used to it until when the MCO comes. So technology becomes part and parcel of our life. Everything we do online, I have to learn, I have to put so many apps into my phone, which I've not known before, given our generation. But we see that this technology is something that will be there, and there's no turning back. But technology is not the only thing in terms of the need for transformation towards technology, fintech, and then how technology can give resilience to the market and also make it sustainable. So I think there's an interesting point by Dr. Damak about use of electricity by Bitcoin for proof of work as opposed to proof of stake and other possibilities in that regard. So how we make that fintech more sustainable in the long run is also another interesting area. But fintech is not the only thing that you're going to be listening to in the real full summit, because we are also exploring other things like Islamic social finance, sukuk, and other types of funds that may further drive the transformation and resilience and also sustainability of Islamic capital market itself. But fintech is one of the important linking and facilitator, because it's like the machine that actually, motor that actually allows the rest to be running. Talking about Sharia compliance, automation actually helps in ensuring Sharia compliance, because you can put in all the necessary requirements and then the output will follow the necessary sequence in order to observe Sharia compliance. So we would like to take technology and fintech as something which is positive. So the way it's actually neutral, we can drive it in a way that it is Sharia compliant. So that's why I'm very excited actually to be in the summit and to listen to the various other experienced speakers to see how, and to listen to their views about these issues. Thank you.
Okay, last but not least, Dr. Mohamed Damak.
Thank you. I think my message is disrupt yourself or you will be disrupted. And I'm particularly interested and excited about the digital bonds and the digital sukuk, because, today the process of issuing sukuk is really cumbersome. It takes a lot of time. It's a lot of back and forth with the lawyers, with the scholars, with multiple parties involved. And the value proposition of digital bonds or digital sukuk is to transform this process from what it is today to the matter of few clicks. So I'm really excited about that. And I hope that this will also open the door to the financing of companies that are today excluded from the financial markets, like the SMEs, for example, for cost reasons or because you'll have to issue a benchmark issuance. All this could be resolved eventually by technology.
Thank you very much. Okay. On behalf of the organizer, CERT, I would like to express our sincerest gratitude to all our distinguished panel speakers and to all of you for being able to be with us today. And thank you once again for giving me the opportunity to moderate this session and be virtually together with my fellow friends. On that note, wabillahi tawfiq, assalamu alaikum wa rahmatullahi wa barakatuh, and I'll pass it back to Ms. Afika.
Thank you, Mr. Zakaria. Thank you so much for the persuasive invitation for our big events. And thank you so much for your time and sharing. Thank you to all of the participants for your interest in our virtual conference. We hope to see you, everyone, in our big event, Islamic Capital Market Summit 2021, which will be held on 7 to 8 December 2021. Register now to secure your seat. Actually, I have a favor to ask all of you, especially the participants. I need your cooperation to turn on your camera so that we can take a group photo. Sorry, Ms. Ruslena. And to all the speakers. Just take just a few minutes. So before we end, to all of the participants or speakers, kindly fill in your evaluation e-form, which we have shared with you in the chat panel. This is to help us to improve our future reference. So on behalf of Third, I would like to apologize for any shortcomings occurring during this webinar. So please turn on your camera and we will take a group photo. Okay, Sama, Mr. Imran, Nurmala, Ms. Raihan, Dr. Maimuna, Adriana Sari. Okay, Aini, are you ready? Aini?
Yes, I'm ready.
Okay. 1, 2, 3, smile. Okay, another one. 1, 2, 3. Okay, Aini, are you done? Done?
I'm done.
Okay, done. Thank you so much, everyone. See you in December. Assalamualaikum.
Okay.
Waalaikumsalam. Thank you.
Welcome, assalam. Thank you so much.
Everybody, Assalamualaikum.
Assalam.
Salam.
Thank you.
Thank you.
Thank you, everyone.